Hello traders, Gary Wagner here, approximately 11 o'clock in Honolulu, 4 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the second day of January 2015, and this is the daily report for gold and silver. You know, we had been expecting quiet days and instead got extremely volatile days. Today it does seem as though we are getting a quiet day as we go into the extended weekend for the New Year's holiday. Really last weekend that anyone can claim a holiday for quite some time. Do have gold trading a little bit higher this morning, up about $4.50, low 1167.20, high 1195.90, currently 1187.40. As I said, puts it up roughly $4.50 on the day. Silver also showing a nice gain on the day, about 9 cents higher, 1576. Now, we have had a range though in silver itself with a low of 1547 and a high of 1616. More on silver towards the end of the show. You know, traders, if you recall from Wednesday's show that we did on the 31st of December, I really didn't expect too much information to be able to be gleaned from today's market activity, in that I believe that many of the traders are extending their New Year's holiday into this weekend and will return on Monday. So that's when I really think we'll start seeing any trends, beginning of the year trends, begin to develop. Now, we have a light market, so we do have a decent range in terms of the trading range itself today. And that, to me, is what's interesting, is the fact that if we take a look at these most recent lows in the market here, and now this most recent low, it does appear as though we are forming some sort of base and rallying off that base. And the real question that we are trying to ascertain, that $64,000 question, so to speak, is whether or not this most recent rally, and the rally I'm speaking about began really first week of November. Market hits a new low at 1130 and then begins to trade higher. It actually trades from 1130 to about 1230, so a $100 rally. And then from that rally, we had a subsequent fall. And on that subsequent fall, we have now not made a lower low, nor have we made a higher high. So the jury is still out. In other words, as this market comes down, if in fact it would find support in this area and then move back, and more importantly, make some sort of a new high here, that's what we would have to see. Then we could say with some level of confidence that we could be entering some sort of a rally period. However, that being the case, until we get that, we still have to look at the predominant facts of the market, and that is the series of highs that we've had in the market. Lower high, lower high. So as the market's moving down, we're getting these lower highs. We're also getting lower lows. Now, we haven't got a lower low on this last move, and so we'll see of obviously a lower low signals the fact that we are absolutely looking at what we'll call a counter wave, a corrective wave to meaning that this is a counter wave to this long-standing down move that we've seen in gold. As I said, today is not the day I figured we would glean any kind of information from the market, but just to give you an idea of what we're going to be looking at come next week, that's exactly the real facts that we need to see unfold, and that will help us determine where we think this market is going. Now, the other things that we obviously want to take note of today is the dollar index, the Standard & Poor's, the equities markets, as well as crude oil. We're looking at a weekly dollar chart. We are at the end of the week. You see that we've had a tremendous rise over this week. In fact, let's go ahead and maybe blow this up now. I usually keep it here so you can see this triple top that we exceeded, but let's go ahead and kind of blow this up. And you can see we had a tremendous rally through the week, and we are closing at the highs of the week on the dollar index. Now, the same cannot be said for crude oil. So traders, we're looking at a monthly chart of crude oil. And so we've started a new month here, and you can see that it's already started, and within the first day of trading this month, this year, is trading lower, now down to about $52.62. We can't really make a lot from that because, as I said, that is a monthly chart. When we go to our weekly, it gives you more of an idea of the kind of fall that we're seeing over this week here. And then, of course, if we look at our daily charts to see what the market's done today, you can see that it is lower still. So whether we look at our weeklies, our dailies, and I like to look at this big picture view, this monthly view, you can really see that we could see some more pressure in the crude market. Dollar higher, crude lower. Well, what about the equities? Well, as of the first day of the year, the market did not close higher, in fact closed off a little bit. This is the S&P Mini, the E-mini 500, half a day candles. You can see it tried to stage a rally at the beginning of the day, however it could not. It is well off the lows being at around 2040, currently trading around 2047, and realize that just a few days ago, I should say last year at this point, but just a few days ago, we were looking at the Standard & Poor's trading at record highs along with the Dow Jones Industrials as we hit this 2086. So the question is, most, if not all analysts believe at some point we'll see some sort of a correction in the equities markets, and the big question is when? And so, as you know, I have been using this Standard & Poor's weekly chart with one fib extension in there, really to kind of plot potential points in which we could see this market correct. So this was simply created by looking this as a wave 1, then a wave 2. We then said in this model that we're now currently in wave 3. Wave 3 cannot be the smallest, which means it had to go above 1753, but typically will go anywhere between 150 to 161% that of our wave 1. We certainly got just a skosh, just a little bit of resistance as it hit this 138% here. This is where we had about a 10% correction. I believe this was in October. And you can also see that we have had, again, a little bit of resistance as it hit these record highs. So what's my sense with this market? Well, if we are just consolidating and we see a rally which starts to take off next year, that would take us through this point, 2099. Remember, 2086 was the high. And then really what we're looking at is 2181. If, however, we see some real resistance come into this market here, then what we want to do is to create a basic fib retracement. And that fib retracement, we can do that real quickly. I'm not going to put all the numbers in, but it's really going to come in from the bottom or start of wave 3, and if this becomes the top of wave 3, and then from there, of course, let's move our hash marks to the extreme right, to the other side. But if that's the case, and as I said, I would plot that out if in fact we find some sort of resistance, but if in fact that happens, then we would look at these different areas for where we think this market could correct to. And then, of course, again with gold, what we really want to see, obviously, is whether or not this long-standing resistance line here gets broken, or whether this or this particular set of lows really beginning at 1154 to 1168, that is really our line in the sand for the bulls. If that can hold, that says one thing. If it breaks through there, we believe we could go to about 1032. If it holds in that area, we will take a look at the bullish model that we presented last year, because then that could actually have some weight, and that could be telling us a whole different story. My sense is that we'll probably see continued downside pressure through the year. However, the caveat is at any point we could see a correction come into the Standard & Poor's, and that certainly could give some gold bulls the momentum to move that market a little bit higher. And as far as silver goes, as you know, I have not been extremely bullish on the precious white metal. I right now think that we have some very, very weak, but some support at 1550. We certainly have resistance at around 16, and then we have resistance at 1650. This has been Gary Wagner, hoping you guys had a great New Year's holiday, and wishing you the best and most prosperous, healthy New Year possible. We'll talk to you on Monday for another daily update review. Bye-bye.